You've likely been seeing fees from your bank go up. No more free checking. You might be experiencing that too. It's happening at a lot of banks, but credit unions, they are hanging in there and they're hanging on to some of those perks. Bill Cheney is the president and CEO of Credit Union National Association. He joins us now. Bill, thank you for being here. I appreciate it.
Thank you so much for having me, Poppy. Great to be here.
You know, we're seeing banks across the board either raise fees or cut some of those benefits.
Right.
You're not doing that across the board in most credit unions. Do you really think that's a sustainable model?
I do, absolutely. You know, credit unions are fundamentally different than banks in that credit unions don't have stockholders. We have members. We're a financial cooperative. So the owners are the members, are what banks would call customers. And that gives credit unions a tremendous advantage. It gives them pricing power. And not only that, you know, Poppy, before I was a trade association person, I ran a credit union. So I know firsthand that there's a difference in how you manage the institution, and anything you can do to help your members, especially during trying economic times like now, you're going to do it. So while you've seen big banks like Wells Fargo and others announce pricing increases, fee increases, doing away with debit reward cards, credit unions are hanging in there and trying to do everything they can to avoid that.
Now, to be fair here, the banks in the United States have to meet much tougher guidelines. They have to have a much higher Tier 1 capital ratio. Do those regulations apply to credit unions? Meaning, do you need to meet those same standards, or are you able to give consumers these benefits because you're just not regulated in the same way?
Actually, today, credit unions have higher capital standards than banks. Our capital levels, as currently defined in law and in regulation, are higher than banks. And credit unions, unlike banks, can only raise capital through their net income, if you will, or what's left over after paying member dividends. So credit unions have strong capital. Certainly credit unions were impacted by the financial crisis, a crisis that they didn't create, but they've been able to maintain high capital levels. And in fact, over the last couple of years, we've seen earnings at credit unions increase slowly, and that's been certainly positive.
It's interesting you say a crisis that we credit unions didn't create. A result of the financial crisis, blame who you will, is DoddFrank and Wall Street reform. There's a lot of chatter among credit unions about the impact that is going to have, both DoddFrank and the Consumer Financial Protection Bureau, on credit unions and their ability to not have high fees for their consumers, et cetera. What's your take on that? How big of an impact do you think it's going to have?
Well, it is a concern, and it does have an impact. Regulatory burden, you know, part of my job is to reduce the regulatory burden on credit unions to create a better operating environment for credit unions. And we've been very vocal here in Washington saying, with the Consumer Financial Protection Bureau and with the leaders here in Washington, you know, part of the idea of the Consumer Financial Protection Bureau wasn't to make regulation more complex, but to make it simpler and easier for people to understand, both consumers and financial institutions. And you can't do that by simply creating new regulations. If you want to simplify it, you have to peel back the onion. You have to get rid of old and conflicting out-of-date regulation, and that's what we've been encouraging the Bureau to do, and that's what we've been encouraging Congress to do as they hold these hearings, to make sure that we're just not layering new regulation on top of old.
You're also,
if we can do that, we can simplify things.
You're also calling on Congress to pass legislation that would increase the amount of money that credit unions can lend to small businesses. Is that because credit unions are lending as much as they possibly can right now? And why do you need Congress to sign off on this?
Well, we have this artificial cap on credit union business lending that was imposed in 1998. Before 98, there was no cap. We have legislation pending in the Senate and the House that would raise that cap to 27.5% while putting safeguards in to make sure that we do it in a safe and sound manner. We estimate that in the first year, without any taxpayer money, we can free up $13 billion for small business. We can create 140,000 jobs in this country, and again, at no cost to the taxpayer. The reason we want to do that is because the credit unions that are most successful in business lending are hitting that cap. And so while we've seen growth through the crisis, banks say there's no demand for small business lending, but the facts are that since the depths of the crisis, credit union business lending has expanded 38%.
So you're seeing it.
Bank business lending has fallen. So we are seeing the demand, but the credit unions who are most successful are hitting the cap and they have to stop lending. It makes no sense whatsoever, especially when the President, Congress, everybody is saying we need more jobs.
I'm interested in what you're seeing from your customers. You've got about 93 million credit union customers in the United States now. Given the market volatility in recent weeks, are they hanging on to more cash?
Well, we have seen a tremendous amount of deleveraging, household deleveraging. We've seen savings rates increase, but the interesting thing is savings are not increasing at the same rate that we would normally see in a recession and coming out of the recession. And part of the reason for that is that people are using some of their excess cash flow to pay down debt. So they're not only saving, but they're also paying down debt, which is a good idea if you can do it, especially with savings rates so low. Although I will say savings rates at credit unions, as always, are higher than they are at banks, and loan rates are lower. So credit unions really are a better deal.